Turnaround Tuesday? Maybe. Turbulent Tuesday? For sure. Good news, folks, is we're way off the low. I don't want to call another double bottom because it ain't a double bottom until it's a double bottom. But we hit the lows last night. Bitcoin to the rescue. We're trading into green. We got stocks moving like lightning. Let's cover them today on pre-market prep. Jonathan Corpina, he's going to give us kind of an optimistic view from the floor of the New York Stock Exchange. It's Tuesday on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
If you're in chasing, you're in trouble. If you're doing just about anything in this market except selling rips, you're in trouble. Up 29 handles near the highs of this pre-market session. We're $1.75 off that. The buck is down 44 cents. Trying to find support here at 103.50. USO, a bad couple days, up 21 cents, 71.10. GLD trying to get back to old-time highs, up 270, 268.74. SLV flat 29.22, and Bitcoin to the rescue, up nearly 3K, hang around 82,000. Let's bring on Triple D, Christian Fromhertz. Dennis been monitoring the markets on a 24-hour basis for us, and wow, what a wild ride last night.
Oh, all over the place. I mean, so oversold. Even to last night, the S&P is just getting hammered. Bitcoin getting hammered. Risk, high growth names hammered once again during the day, hammered overnight. And you're like, is there any relief in sight? Well, we did get some relief around 10 p.m. last night. We started bouncing in Bitcoin. Crypto started bouncing, and then everything started bouncing too. Bit of a Trump bump for a few stocks. Trump says he's going to buy a Tesla tomorrow to try to support it. So Ron Barron pumping Tesla this morning. So you're seeing a Tesla bump here too. I mean, we're massively oversold on all these names. Some of these names, just to go through the carnage with you just quickly, like look at a name like Reddit, RDDT. The stock $230 a month ago. It's $110. So you're talking about stock just fell 60%. Bang. Yes, they had an earnings report. The earnings report, didn't blow anybody away, but it has just been like the last couple of days. It feels like capitulatory selling, where we go from 150 to 107. Bang. Just like that. I mean, that's capitulation. I'm starting to feel like, we're getting a little bit of bounce this morning, but one of these days, one of these bounces is going to hold. Christian, what are your thoughts? I mean, we're really oversold on a lot of these names.
Yeah, I agree. Yesterday just felt like I was calling it yesterday the great growth unwind in terms of what we're seeing at this point. And I think that we just got stretched enough to the downside. I mean, that was another, Joel mentioned, futures were down again. I think at one point, NASDAQ futures were down like 1%. And yeah, you're just kind of getting so stretched at this point to the downside. That's a SPY. That's the channel that I talked about that we're in. We've been in this downward channel. I think that makes it very easy to kind of see, putting together a little bit of a trend line in there and just noticing that we got to the bottom of the channel. So, I think that a bounce is due, maybe a little turnaround Tuesday for you. But I think that you just want to understand like where we are right now. And, I think you're right. I think that we're going to get something that is going to actually turn us. But I don't know if that happens this week or maybe next week when seasonality gets a little bit stronger. We do have 2 inflation reports. Those are going to be interesting for the market. But for now, I think you want to respect that channel.
Yeah. And it's not just, S&Ps, obviously QQQs. Let's go look at that as well here, because this is taking the brunt of the damage. $540 down to $475. What is that on a percentage basis? Do you have anybody in front of you? What did the QQQ correct so far? Because obviously the damage has been quite a bit worse there than the S&P. Do we know what that is, or ballpark it? 40, so you're talking 70 points on 540, 15%?
The Qs are Reddit, sorry.
No, I moved to Qs.
Qs, let's see, from the highs.
Highs to the lows. Just trying to
Highs to
get
the
a
lows were about
13%.
like 13%.
13%. So quite significantly. I mean, even a stock like Apple yesterday, finally, Apple had been holding up and finally caved yesterday as well. So you could just see slow and steady that, everything started to cave. I'm torn. I'm very torn here because a lot of me wants to come in and start buying some stocks. A lot of me wants to come in and say, hey, we're oversold. This is a pretty decent opportunity here. And I think it's time that we get down and dirty and actually maybe, start putting some capital to work. The only thing I bought yesterday, I did buy some more emerging markets fund. I bought the one in Canada, I forget the symbol of it, but it's basically tracks EEM. So if you're American,
Okay.
that's basically what I was buying. And just using the dip yesterday to say, hey, I think emerging markets are not in the brunt of the storm here. I think, AEM obviously will give you a diversified emerging markets. It's not just China and China's run so far. So I did buy a little bit more of this. I think it's perking up. It's gone nowhere for a long time. But if there's any environment where it's going to start to, maybe emerging markets start to show some life, I think it's when North American markets are struggling here. But really, I mean, there's a lot of stocks you could come in here and say, hey, maybe it's time to start nibbling. I'm asking the chat, I'm asking you guys, long-term portfolio. Maybe it's time to start nibbling.
Well, I like that idea too with the emerging markets because everything was down yesterday.
Yeah.
We've been talking about how international has been outperforming, but yesterday everything was down globally. So I like buying the dip in emerging markets as well. So I'm with you on that. I'm still trying to find. I'm a little bit. I mentioned I have not gotten really exposed in terms of like getting more exposure to Europe. So I'm looking at that, looking at kicking around something, maybe EWG, which is the Germany ETF. But I'm with you on the same thing with China too, like buying the dip a little bit. I think
Maybe.
works a little bit better versus US right now.
DG say nibbled on Hood. I did too yesterday. I nibbled on a little bit of Hood. I'd been in once at 48, and then I felt like I was too high, and I get the pop back, and then I was like, you know what? I think I'm going to get it cheaper. I bought it early yesterday, and I'm already underwater. I mean, I couldn't believe the move in Hood yesterday. I couldn't believe the move in a lot of stocks. But again, I feel like a little bit of capitulatory selling here. I mean, Hood's had a 2-for-1 stock split here, really from 66 to where we were last night, around $33 we got to last night. So you could say in the after hours, I actually did do 50% retracement here and like a 50% bear market here. So many stocks down significantly. I mean, are all these stories over? Is the Robinhood story over? I mean, if Bitcoin continues to crash, it's not good for Robinhood, but hard to say that a lot of these stories are completely over. And at a certain point in time, maybe valuation starts to matter.
What's the valuation, Dan? You mentioned a lot of these stocks. I mean, what's Reddit still at? What's Hood still at? I mean, because I used your stocks and jocks today. The momentum investors, they just buy, 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 and then they flip the switch and they sell, 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 and the momentum is to the downside. Where are the valuations? I mean, where do you go? I mean, what's Reddit? Is it under 30? Is it 40? Is it 50? I mean, what's the
Well, the
valuation?
valuations are all nuts. So this is what we've talked about before is, you don't have valuation support on any of these names. I'm not adding Reddit to my long-term portfolio. Reddit's the one I probably wouldn't because the valuation just never made any sense at all. I mean, the valuation's still 81 times forward earnings. So price to sales at 12 after a 2-for-1 stock. It never made any sense, Joel. So, I mean, but stick away from some of the ones like a Palantir or Reddit that the valuations still don't make any sense. And maybe you start to look at stocks where the valuations are starting to make sense. I mean, even Amazon, it's trading 25 times forward earnings. The cheapest stock has ever been in the history of the company. Because when it was always trading at 80, 100 times earnings when it was growing like crazy. Obviously, it doesn't have the growth rate it did 10 years ago. So, you're not going to be like, wow. But I mean, 25, NVIDIA is trading, I think, 25 or 26 times next year's forward estimates here. At a certain point in time, some of these stocks are actually starting to get cheap, if you believe the forward estimates. I mean, if we go into a full recession and estimates have to come down, that's where it starts to get, ugly. But I mean, I don't know if we're there yet. I don't know where we're going. So there's a lot of unknowns. So I don't think we can go all in this market, but I do think we can start thinking about nibbling a bit. If you're sitting with a pile of cash, Maybe just put a little bit to work. Nibbles. If you want, if you wanted, 500 shares or something, maybe you're buying 100 or 200, on these pullbacks here. I think that's where I'm at.
Okay, do you want to cover to get the Oracle out of the way? Get the Oracle report out of the way,
No, I don't. I want to start with the airlines here because this news
Okay.
came out of the blue. Although Christian was saying there were some conferences, but Delta came last night and warned. And I mean, the airlines here have been getting really beat up. So maybe this warning was going to be in the cards. Delta ahead of this, was $69 a month ago, went out at $50. They warned last night, significant warning, sees Q1 total revenue up 3 to 4% versus estimates were 7 and 9%. They lowered the Q1 EPS from 70 to $1, which they had just bumped up, down to 30 to 50. So they're seeing significant demand coming down here. Delta absolutely killed last night. I mean, it was down 10% at one point in time, over 10%. It was down almost 14%. It has bounced with everything else here this morning, but it's just a bounce. I don't think we're at this, stage where we can say like we're this is it, we're bouncing back. I mean, the numbers are coming down to where maybe the stock price was predicting this by falling so far. But even UAL, which said nothing last night at one point in time, was down 10%. And props to you, Mr. Elconin, because your acronym, which was all short stocks at the beginning of the year, is starting to really look good. UAL was the punt, or the U in your punk/punt. Stock was trading up near $100. It's now $75. So great call by you. I was looking at your acronym last night. I think you're up in all those stocks now. So you're the one person with the acronyms that did a pretty good job.
Can I give you my I have a new indicator.
Okay.
And I wish I would have adhered to it a little bit more. It's the poor service on Delta Airlines carrier indicator. The last few times I've flown on that airlines, all right, they're like, no service. Like, we can't serve drinks because of turbulence. And I'm like, okay, so you buckle the seatbelt, you're ready for 4 flights, maybe 6 flights, absolutely no turbulence. And they'd ended up not even giving you the little crackers or anything. And I'm thinking to myself, they're trying to save money. They are trying to save money.
They've been doing that for years, though, Joel. Do you think Delta just cut that out? Because all the other airlines give you nothing forever. So I don't fly Delta regularly, so maybe that's a new one for Delta. I mean, I know Air Canada recently started charging you for your carry-on bags on January 15th. So they are obviously nickel and diming us, but I think they always were nickel and diming us. I don't know if that's a new thing.
It's new but the thing was that they said it was because of turbulence. So, when they say there's turbulence and everything that's been going on in the air, you're like, I actually wear my seatbelt when they say there may be turbulence. If not, I'm like, what the hell? Who needs it? If you're going down, you're going down. A seatbelt's not going to help you. But it was like, because the weather here is weather there. But anyways, let's look at Delta. It got down to 43.04, folks. So on this upper right chart, we're down in this area. I mean, I think the pre-market low is going to hold. Longer term, there was a nice base at 40. This was in August of last year. So if you want to be a little bit patient, look for that area of support. But that's a nice bounce off that 43.04. So I think if you want to own that, you got to get ahead of it a little bit. UAL got butchered too, but this just wasn't. Let's go the opposite of the airlines. Let's go the opposite picture here. Love traded higher.
Yeah, what is the news catalyst? Because Love was down significantly last night as well, and they come out here with their own guidance, and their guidance wasn't as bad. They did cut some of the revenue growth numbers, but they are outlining this whole change to drive revenue growth and reward its most loyal customers. So they got all these changes they're implementing here. We know Love has went in 10 years from the best of breed to the worst of breed, and it's been in the gutter here. But yeah, LUV getting a pop back. So Christian, how many of these other airlines are going to report numbers here? You were saying there's some conference or something
Yeah,
going on or
they're all
something?
speaking at there's a JP Morgan Industrials conference. So American Airlines already gave their numbers too. American Airlines sees first quarter adjusted loss 60 to 80 cents, saw a loss of 20 to 40 cents as well. So they're out as well, and that's why you're getting the LUV too. So all of these companies are speaking. Also, Viking was out this morning too. Obviously more on the cruise, but still with the travel theme.
Yeah.
They were saying that they're not seeing a change as of yet in terms of the demand that they're seeing. So, yep. So yeah, that's American Airlines, and then LUV, which of course you've got Elliott in there too. So making a lot of changes there. The VIX is spiking. I'm looking for a headline, not really
Futures
seeing
have
much.
rolled over here.
Yeah.
Again.
So
I'm
again,
buying the dip a bit here this morning, just in my trading account. Just nibbling here in a little bit right now. Just bought some S&Ps just as we come back approach to flat. I think we're still going to be choppy. Like, I mean, the whole year was been fade trade, but now we've obviously just went into full-on sell-off mode. But I don't know what the headline here is. I was looking here too. Somebody's probably said something.
I don't even think there's headline. I don't even think it's headlines anymore.
Just
I
chop.
just think, yeah,
Just
I just
continue
think that,
chop.
yep, 10, 20, 30-point moves, 40-point moves, 50-point moves.
Crazy
I mean,
moves,
I
man.
think that's and like I've been saying the last couple days and stuff. We have two lows in the same area, but after you do that, you need to calm down, and we are not in the calm down stage yet. So I wish I could say that.
One other thing I was just going to mention, guys, and we just talk about this really quickly, but I'm still not seeing I'll ask you guys this question. Do you guys think that there's a good amount of fear, even with the VIX going up to like close to 30 yesterday? I think we hit a high like 29.50. Do you think that there's enough fear in this market? Because usually that's a good sign of a bottom where people kind of like throw in the towel. Do you think we're at that point yet?
No, I don't feel like it's like everybody's throwing in the towel. I think there's still a lot of people, like even in my own Twitter, people reaching out saying, "What are you buying? What are you buying?" When that stops, usually that's more indicative of a bottom. It hasn't really stopped yet, so I don't think we're in full-on fear mode. And really, the S&Ps have held up very well. There's been a lot of stocks. We haven't sold everything. We haven't gotten to this market that just wants to sell everything. Yesterday was a little bit of taste in the afternoon where it started to finally start feeling like even the staples started rolling over yesterday. So It finally was starting to feel like, hey, maybe they're going to start selling everything here. But we haven't really gotten to that market yet. It's been selective, and Christian, you've been spot on. It's been all those growth names. The overvalued, buy them at any price because somebody else is going to pay a higher price tomorrow stocks. Those are the ones that have been hit. And I mean, people are learning the hard way. I mean, valuation doesn't matter until it does. And at a certain point in time, it does. And if you were in like a Reddit and saying, well, they got the data, they have so many customers, they got the data. I mean, yeah, you can keep saying there's reasons for this going up, but a lot of it was just pure Momo. So, and obviously that's broken there now. But you look at a stock like Reddit, there's no valuation support at all. It's a value investors are down to like $50. So I'm not saying it's going there. Momentum can come back in any name, but I'm saying me as a value investor, I'd never put Reddit in my long-term account because it doesn't make any sense. So it's tricky, Christian. To answer your point, I think there's fear out there, but it's selective. It's not across the board.
Joel, if you want to show that one screenshot that I just put of the equity put call ratio, this is one of the things that it's not just, so I look at this and I'll look at things like the McClellan oscillator too, but I'm just not seeing like the normal spike in fear.
I'm not seeing it yet, Christian. Oh, is it? Oh, okay. I know
it's in the chat.
Okay, sorry.
That's okay. But normally, like I would start to see like many more puts going up in equities. Now I know, like if you go onto social media, they're talking about look at all the put volume that's happening in SPY. Well, yeah, there's also a lot of call volume that's going up in SPY. What I'm referring to is just equity. So where outside of ETFs, you're just not seeing a lot of puts trade. You're not seeing that. And usually what I'm getting at here is that when you start to see people reach for puts in equities, you're starting to see that fear of like, oh geez, we've It's been at the tail end of a correction or a dip. And when you see those people reach for protection, then it's usually a sign of a bottom. And we're not seeing people reach for those puts in equities. So again, if we were, that ratio would be higher, right? That the ratio would be up to 0.9, 1, something like that tells me that there's fear in this market. But right now we don't have it.
I'm trying to just not saying, but I'm just making sure that we're getting the correct data here, because Zero Hedge was reporting that yesterday, and maybe it's just by the day, but that yesterday was the highest put volume ever.
Yes, but it's also a lot of calls too. They're only reporting puts. I don't know why.
This is net. Gotcha.
Because
this is the net. Okay.
Right. So what's happening is that's because people are trading a huge amount of ETF options because of volatility, not because of fear. Two different things. So if you look at also, there's a lot of calls that are going up. So yeah, like I don't know why I've seen several people post about the put volume, but they're not talking about the call volume, which is also heightened as well. But why are they not showing both? I don't get it. I don't know what their motivation is to say, hey, we're seeing all this put volume, but it's not fear, it's volatility. When there's a lot of volatility,
they're still buying calls. When they stop buying calls, that's when people are really spooked.
Right.
And they give up. No more calls.
Right. And you have to realize too, like that correlations increase when you've got volatility. So you could, and I trade more index when you've got correlations increase because there's not as much stock separation. That happens when the VIX is back under 20.
So interesting. Again, I'm with you. I don't feel like it's across the board fear, but I feel like there is pockets where people, I don't know if it's even fear. Like, what I do notice is there's a lot less chatter on all these, names like To the Moon, with your, Plant Palantirs and all these names. There's less chatter out there. So there's definitely some people who are hurting in the background. There's a lot of retail darlings. I mean, this has really been, if we really want to sum up what this sell-off has been, it's been the crushing of retail. Like, retail has really been hurt here because it's those names that, and not all retail traders, there's some very smart retail traders, but it's really been a lot of the retail darlings that have really been hit the hardest here. So I think, when you look at across the board, institutional money managers here aren't doing that bad. Like, some of them are applauding it because we've seen, to your point, Christian, the value trade. The value trade's done very well. So if you're sitting with a lot of value stocks and been underperforming forever, because growth has just taken off over the course of the last couple of years, right now you're feeling pretty good about yourself. So this is not a sell everything market. This hasn't been the case. It's just been those growth names.
Selling Verizon right now. You got some news here. They're presenting at the Deutsche Bank conference, and there's Chief Revenue Officer. Gross ads this quarter are probably soft. So, wow. Big move here in Verizon after a big update. Wow, a lot of room on this one. But Verizon, once again, giving us information that the consumer maybe is getting a little pinched here. But that hit its highest level since mid-2022 yesterday. Getting a little pullback here if you're looking to get in Verizon.
Here's a great
the
example.
Safety stocks.
Yeah, the whole reason Verizon, you're seeing all these staples go up, isn't because these companies are doing better. It's because they're value trades where growth money is going to hide. So this is what you get. I mean, you get warnings and stuff because, let's be honest here, Verizon's been a crappy stock, folks, for a decade. As if you were in Verizon in the last 10 years, sitting and getting your 3, 4, 5% dividend, and you're watching the market just go up, but you're watching your capital erode. Really, even if you include all those dividends, Verizon's not making you any money probably whatsoever because it's losing just as much, on the stock depreciation as the dividends have paid. AT&T has been the same story. AT&T has just been an epic disaster. Not in the last year, but in the last 10 years, it's been an epic disaster. So I feel like the recent rally in AT&T and Verizon, which are companies that are very much still struggling overall compared to where they were, cord cutting, think about DirecTV with AT&T. That's just an epic disaster. So I think this is a gift. I think there are gifts out here where, money's been flying into this defensive stuff, regardless of, and now even, to the point of like Coke making new 52-week highs or all-time highs. A lot of these names are overbought just as much as some of these other names are oversold here. So I think I'd ring the register on a lot of these other names that have been flying up just because they're the benefactor from the growth sell-off.
Verizon was at $45 before the great financial crisis. And that's where it's trading.
2007, it was $45. It's $45 today. So yes, you got a lot of 4 or 5% dividends in there. So that was pretty good. But stock went nowhere. The S&Ps have went from 666 to where are we? S&P today?
50. Let's call it 5650.
So you have 900% of the S&P, but you got that 5% Verizon dividend all those years. So I mean, think about that when you're sticking Verizon in your long-term portfolio right now, folks. If you're putting Verizon in your long-term portfolio here, I think it's a mistake. Is there a trade here? Sure, it's perking up. But if you're banking on Verizon to carry your portfolio for the next 10 years, you're banking in the wrong place.
Yeah, I was looking at a couple of these things. It was to kind of figure out yesterday if I wanted to be long some of these value names. I decided not so much. Like look at McDonald's, for example, too. McDonald's had a nice move. But, finally, it succumbed yesterday when everything started to kind of sell off yesterday. Some of these names that were trying to go higher kind of came back in a little bit. That's one that I'm watching too, but it's tough because I think to your point, like, I'm not sure if I want to own McDonald's as as my thesis going forward, I mean,
no.
So that's what you have to contemplate is whether or not that's the direction that you want to go in right now.
I mean, maybe right now a good exercise would be to take off the trading hat and put on the investing hat, because usually when you get significant sell-offs in the overall market, it's good investing opportunities there. Maybe, maybe you're just coming in and buying some Qs. Maybe, you're an index guy and you're just going to buy some SPY, or, maybe like me, I was buying some emerging markets fund. Maybe you're looking a little bit international on yesterday's pullback here. But maybe there's the opportunity here to start thinking about long-term investing. But if you're starting to think, okay, now is the time to buy McDonald's or now is the time to buy Verizon, you are absolutely doing it backwards. Absolutely. Merck and, all these drug stocks parking about Gilead. I mean, look at the move in GILD, Joel. This has been the dog of all dogs since they solved, what did they solve?
Or
whatever the hell. Look at the freaking move. This is a stupid move, folks. It's a stupid move for companies that had no growth forever. 60 to 120. The stock has doubled. I mean, this is a gift, folks. This is a gift in Gilead. Amgen. I sold my Amgen, maybe too soon, sitting up here near all-time highs. It's been awesome. It's been a good comeback story. The reason Amgen is going up, though, is because all those other growth names are going down and they're playing defense in the drugs. They're playing defense in the staples. They're playing defense, in the bond like Verizon's and AT&T's. They're playing defense here. The stocks are popping because the market's playing defense, not because these companies are killing it. Amgen's got, the weight loss drugs they're working on. There's a story there still, but I mean, it's been a big move. So, I sold it just because this has been a good move. 260 at the beginning of the year, 330. This has been the laggard year, folks. We called that right too. Leaders to laggards, laggards to the leaders. I did not think it was going to be this vicious, but I'll tell you, whatever sucked in 2024 is holding up pretty well, and whatever was awesome in 2024 is getting killed.
I almost bought something yesterday, but I didn't. I don't know if I am now. I was looking at Rocket, and boy, oh boy, talked to a buddy of mine, and he said, maybe wait a couple days, because they really paid up on that deal. I mean, they paid. I mean, they paid up, and getting punished for it. Now it's down another 77 cents. So I don't know. Now it's giving.
We're just not in Kansas here. Like when stocks are popping up, they drop. And they did overpay for that deal. They're not just ripping back after the big drops here. Sometimes they are, but they're not as much anymore. They were earlier in the year. They were in January. They were bouncing back, but that's not the case here right now. The bears have taken over. You're in a bear market here, folks, in a lot of stocks. So Rocket was looking great on the charts. You're right. They overpaid, Joel. Is there a place here? Maybe you wait a couple of days. Maybe you wait, but it's tough. Buying stocks right now has been painful, unless you're in the McDonald's or Verizon's. Those have worked out okay lately, but It's been a tricky market because you buy something, then 2 days later you're like, why did I buy that? You're down 5%.
Dennis, I remember talking with you years ago about the housing sector and the market. This is probably close to when we started pre-market prep, and we're like, man, the housing stocks, they're tied to so many things. And someone just asked about the XHB here, and boy, oh boy, I mean, I don't know. I mean, these are starting to look okay. I think on a relative strength basis, look at it, been holding up pretty good here. Nowhere near its low for March, right? Up a little bit today. So I
They
don't know. Still's
they
been a
stopped
big run of these. Go ahead, Christian.
they stopped going down, which I find is interesting. The last few days, they stopped going down, and at one point yesterday, they were leading. Like DR Horton was doing really well yesterday, but again, they didn't close where they were. But DR Horton was up like 3 or 4% yesterday, so I think it's an interesting group to watch. I think also you've got to keep your eye. I know we haven't talked too much about interest rates. TLT was also rallying last night pretty decently, and that reversed too. So, I went long some bonds. I went long IEF last week, but I'm not getting the move that I want to see there yet either. So I find it very interesting that home builders stopped going down. But I'm wondering if we're going to see more of a move in things like IEF, which is the 7 to 10 year bond. I know everybody looks at TLT, but I think it's in a good spot. But I think I think those home builders can continue to possibly rally, but we've got to see a bigger move in IEF and TLT.
Yeah, interest rate sensitive names. So, if TLT starts to rally, you start thinking about all those names as well. So just know your relationships. I mean, that's really what I am at the core, is relationship based. You know if this is moving down, this possibly could be good for this. Or if this is moving up, this possibly could be good or bad for this as well. You got to understand those relationships. Home builders very sensitive to TLT.
You want to talk about the consumer a little bit here, with two retail earnings reports coming across here. Dick's Sporting Goods. Let me. I think the
The
numbers.
story's not good with the consumer. The story is the consumer is slowing down. Dick's has been a storied stock that has been kicking butt really since COVID, Joel. Like look at where it was in 2020, $48, 250. At a certain point in time, stocks need a pause, stocks need a break. I mean, this stock, as much as, maybe it's oversold the last few days, it's been overbought. But, valuation still attractive on Dick's. The earnings reports was not that bad. Just taking over here for you. So we're looking at net sales. The guidance was 1380, 1440 versus 1484. So slightly light on the guidance. They did boost the dividend. They did beat on the top and the bottom, but we know guidance always jumps, and guidance is slightly light. I don't know. Throw it to Christian. What do you think of Dick's?
I think you're absolutely. I think it's in the group right now of consumer discretionary, and I don't want to be in this group right now because I think that the softness, recession fears are in consumer discretionary, and I think it's a place to avoid right now.
And then Kohl's is a disaster. I sold the majority of my Kohl's yesterday before the print because I didn't want to take it through the print. And I'm glad I did, because it's just that Kohl's is just an absolute mess. So they did everything wrong here. The quarter was fine. 95 cents versus 73. You're like, wow, that's really good. 5.17 billion versus 5.14 billion. They're like, wow, that's really good. But then the guidance. They're seeing fiscal year 2025 earnings the whole damn year. 10 cents to 60 cents. So they just made 95 cents in the fourth quarter of 2024. They're saying the whole year, we may make 60 cents at the upper end. That is a mess. Comp stores, they see down 4 to 6%. Knit sales, they see down 5 to 7%. Dividend being lowered from 50 cents to 12 cents. So forget about that 19% dividend. That is now gone. I mean, what a disaster. Every laggard and dog can have its day, but it's hard. Because when you're in these downtrends, and this is, just, another one, where we know the Macy's and the Kohl's and stuff, they've just been not loved by the consumer for a long time. We know it's went to off price, where, your TJXs and your Burlingtons. That's where the money has kind of went overall over the course of the last decade. And that trend obviously continues. But this retail Kohl's report, it's a disaster, the guidance.
All right, let's get a whiff of optimism here from the floor of the New York Stock Exchange. Or from Jonathan's den, Jonathan Corpina, managing partner of Meridian Equity Partners, joining us here on pre-market prep. Jonathan, how are you doing on this turbulent Tuesday?
Gentlemen, good morning. It's a pleasure being here with you guys. Hopefully a little optimism, but we'll discuss it out and see where we come out on this one.
All right, what's the number one culprit?
I think we're looking at basic headlines coming out of Washington. DC is moving the tape here. Every headline that we get coming out of the Trump administration has added a bunch of uncertainty to our markets here. We had the Trump rally, if you want to call that, leading into the election. We had the Trump rally after the election. We could debate whether that rally was warranted or not, or maybe was exaggerated a little bit too much. But what we've seen is, as we continue to hear about these rollouts, these tariff rollouts from the administration, there's a lot of uncertainty about how it's actually going to play out, the timing, the details, and the actual ripple effects of it. So as we've continued to have this back and forth on tariffs, the market uncertainty just continues to snowball. And at one point, we got back to someplace where I felt where we probably should have been, but the momentum has never stopped. The momentum has continued, and we're still uncertain as how far tariffs are going to play out, not only with Mexico and Canada, but how it's going to play out with China and other countries. And the momentum has continued to roll. So we're seeing some pretty significant pressure on our markets based off of tariffs and uncertainty. Yes, we also continue to talk about interest rates and inflation, but I think the real culprit right now is what's coming out of Washington. We're going to continue to get more headlines here. This is a negotiation.
CPI, PPI. I mean, I think today, if you're just like, hey, we're up 6.5 handles, rah, 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 rah. I think, what about the inflation? Like, the last thing we need is a whiff of higher inflation.
And we might see that. We might see that. And I think that might be needed to kind of flush this whole market out, right? We've all seen this before. When you've got pressure on the market, it needs to flush out, and then it's going to find a base and build back up again. Go back to August, right? Go July 15th, July 16th, we had a high in the market. A week and a half, 2 weeks later, we had this massive sell-off in the market. VIX hits 30, 32. In the middle of August, we had this big down sweep in the market, found its base, and bounced back up again to where we got then through elections. I think we're seeing the same type of pattern now. This just seems a little longer, and there's a little bit more uncertainty what's going on here. We are going to continue to get information that's going to show us that inflation is still here. We're going to get the Fed next week, who might be forced into, based off of this current market activity and economy, might be forced into cutting rates a little bit sooner than was planned or expected. We need to get this all flushed out. Give us CPI, give us PPI, give us Fed next week, and in my opinion, this will be negative pressure on the market, but it's the flush out that we need then to start to build up again. We got to get through the end of the quarter. This quarter is unsalvageable. There'll be no window dressing, as we always see. I think portfolio managers just want to get through the next 2.5 weeks, licking their wounds, and then start fresh again come April.
Volatility. Let's talk about the volatility and sentiment. I mean, we've had a sell off here, but it seems like people aren't broken yet. They still have that buy the dip mentality. Is that, you think, what's kind of keeping us afloat here?
At this point, yes, and I think Christian was talking about this on your lead-in. We haven't seen the fear, we haven't seen the panic, we haven't seen the capitulation. Yes, we are trading for institutional customers. We are seeing significant sell orders, but it's not sell them, get me out. I need to clear this off my portfolio now. We're not seeing that. It's been very, very measured, very calculated, and waiting for certain opportunities. So I don't feel that fear and panic yet. If you look at the VIX hits above 30 yesterday. First time we've seen that since I think August. But we kind of bounced off. We kind of hit that top level, came back down. It looked like towards the end of the day, we were trying to make a pretty good run, but then it stalled out. I'm not feeling that fear and panic yet. But if you look at some of these indices that are, these sectors that are out there, if you're looking to buy the dips, look at some of the stocks in the Mag 7. We've got Apple, Amazon, what else? Google down 10% so far year to date, and Nvidia 20%, Tesla 40%. We've got some pretty good buying opportunities that are here. I don't think we're going to see much lower than where we are right now. They could go lower, but I don't think significantly lower. So I think at some point here, again, as we get through economic data this week and the Fed next week, and everyone's going to start to wait for that. Once we get through that, I think we're going to start to see some buying coming in. Again, it might not happen at the end of this quarter, but I think as we get into the beginning of April, we'll start to see it.
What about, we could talk all these factors, we could talk valuations, we could talk about oversold conditions, but one thing that's persistent, that's not going away, is tariffs in the geopolitical situation. We got a lot going on. Is there a buyer's strike going on until either tariffs are off the table, something goes on in Ukraine? I mean, where are we at on this, Jonathan? Sometimes all the other factors, sentiment, all these things, unless the geopolitical situation gets cleared up, maybe there's going to be a buyer's strike.
It certainly could be, right? So our geopolitical and tariff issues are certainly there. I think the way that this plays out is that the administration, is shooting first, asking questions later, using very hard negotiation tactics. I feel eventually this will kind of find its way, right? We're gonna come to some sort of resolution that is going to be somewhat palatable for both sides with Mexico and Canada. As far as Ukraine is concerned, we all watched that unfold in front of our eyes in the Oval Office. Headlines overnight saying that we've got Zelensky writing an apology letter to Trump. Whether he accepts that or not, they'll eventually come to some sort of resolution on that. I think President Trump at this point has made his statement known. Best scenario in my opinion, we get to a resolution there where we then continue to help Ukraine in some way, and whether that's the minerals deal or continuing to fund, again show support on that side there. Once we get those headlines, and I think we're going to get to those headlines, you're right, there is a buyer strike, but we are going to start to see some of these stocks that have been hit 10, 15, 20%. It's very appetizing to start to pick away at some of these here. Unfortunately, we're not seeing the headlines just yet of a tariff resolution. We're not seeing the headlines yet of a resolution in Ukraine. So once we start to see that trickle, I think that's when investors will feel somewhat comfortable getting back into this market.
Jonathan, let's talk volume. Like a lot of times you see capitulation, huge volume. When I see a stock going down, getting killed. And of course, the first day with the big volume day on the bad news, and then it kind of dissipates a little bit. And I look at that as, all right, everyone who wanted to sell, has sold. Maybe like out of, they're done. What are you seeing in volume? Are you seeing any indications in volume that investors should keep an eye on?
Yeah, certainly about 3 weeks ago, we started to see a spike in volume, and that tells us a couple of things. It tells us that the moves are real, and when I say the moves are real, that means that it doesn't mean that it's a panic move. It just means that there is some conviction behind it. There is some reasoning behind that. And then we start to see an uptick in participation, right? And when we talk about volume, it's sell volume and buy volume, right? It's all within that market that's there. With the volume picking up, at these points and what we saw specifically yesterday, it's starting to tell me again that there are buyers that are out there who are waiting down below for certain stocks to hit certain prices, certain levels and indices that they start picking away and getting back in. You're not going to pick the absolute bottom or the top every single time, but if you ride the wave, you are certainly going to get some prices. Volume has spiked. This is indicating again to me that the moves that we are seeing is real. It's not sometimes we start to see the market move up significantly or down significantly in a short period of time with little volume to support that. It's volume that gets pulled out of the market, and then there's not enough volume to protect these swings. We are seeing the volume participating in these swings, which again shows me that from the sell side, the sell pressure is real. And as we continue to see the market move lower and lower, there are buyers that keep coming into this and starting to support this. You know, we love talking about this, right? And we love talking about this back in August. If you look at a long-term chart on the markets and on the indices, these are going to be little blips that we see, right? And the market needs this. It needs to flush out sentiment. It kind of needs to remind people how sensitive this market is and how fragile this market is, and that the geopolitical risks that we have out there, our internal risks when talking about inflation and interest rates, these are factors that are still here. So this is a good wake-up call for all of us that the market doesn't always move up. It doesn't always move one way. And there are certain headwinds that are out there, but we'll work through this. This will all pan itself out. We're not going to get to a world where we're issuing tariffs on 50% on everything that's coming into this country, because we're going to get reciprocals on the back end of that, and then that all trickles down to the consumer, right? And that's what we're trying to protect. We're trying to get inflation down. We're trying to protect the consumer. You guys are talking about discretionary spending coming into the show here and in some of those sectors there. We got to try to protect against that. And I think having tariffs at extremely unreasonable levels is not going to provide the American people what they need and what they want. So we're going to get back to some sort of level here. Should we be charging tariffs on goods? Yes, we should. Should that money then trickle down into our economy and help support inflation and help support interest rates? It should help support our infrastructure. It should. We just got to try to find a happy medium here. And as I said before, you know, the administration kind of shoots first, asks questions later. We need to kind of reel things back in a little bit, get back to what our core intentions are, and make sure that we get that executed. Mexico will come back to the table. Canada will come back to the table. Ukraine will come back to the table. My expectation is that should be sooner than later.
Hey, Jonathan. So we've got a lot of events coming up this week, and we also are hearing that that the administration, President Trump, is saying that basically they want to see inflation come down. I think that this is also a lot of those types of actions are with the goal of breaking inflation. We've got two big reports out this week. We got the CPI and the PPI report. Also next week. So I don't know if the inflation data if we're gonna start to see that come down yet. I know that there's a little bit of a lag, obviously, with some of the data points that we're going to get. But then we've got next week as well. We're going to hear from Mr. Powell. We're also going to get quadruple witching. Do you think that, what are you most focused on in terms of these events that are coming up in the next 2 weeks?
Right. So you're right. The data is lagging, right? And some of us understand that and some of us don't, right? And the markets are going to not favorably react to that. The expectation that we elected a new president who came into office in January, and in a very short period of time, all of our problems from the past are going to go away. It takes time for all this to play out, right? So I think the expectations are unrealistic that interest rates are going to go back to 3% quickly, and inflation is going to go back to a point where everyone's comfortable with. So the patience level is not there, which is unfortunate. We clearly see this underlying tension between the White House and the Fed. The Fed, who remains apolitical and independent, and the White House, which feels that they should have some sort of say at the table there. So we continue to see that tension that goes back there. We hear it in both sides when we talk about that. So my take is that we are going to be a little choppy as we get through this economic data, as we get through next week, again, as we get through the Fed. The Fed is going to say we're going to remain data dependent. Data doesn't support the data is not showing that we're getting the improvements that we need. The geopolitical risks are still out there. They're going to continue on their blueprint speech that they normally do. It's just a question of what wording, what indications are going to be there that's going to show us or tip their hand to us when they think interest rates a cut would be in play. We continue to have this conversation for years now as interest rates have moved in the manner in which they have. I don't have the data right here in front of me, but we started at the beginning of the year with interest rates not getting cut towards the end of the year. I think that timeline probably will move up considering the market activity that we've seen here. We're going to have to get just some indication from Powell as to what they're thinking and kind of hopefully get away from this tension between the White House and the Fed, because again, the goal is get inflation down, get us to a point where we feel comfortable that this is moving in the right direction. But this is a massive cruise ship and it's not turning quickly. It's going to take a lot of time to get this back on course. And the expectation is that new administration, let's fix this immediately. That's very unrealistic.
All right, Jonathan, I want to feel your optimism. I'm not feeling it yet. And then I'm pulling up and looking like 50% retracement from the COVID lows and things like that. And but you know what? It takes time, and we'll see it. You mentioned a lot of things that have to take place. So we'll see if they happen over the next couple of weeks, next couple of months, next couple of years. Jonathan Corpina, managing partner over there at Meridian Equity Partners, joining us on Pre-Market Prep. Thanks a lot, Jonathan.
Have a great day, guys. Thank you very much.
Thanks, Jonathan.
Okay. We did get some news out of UAL. And Christian, I'll let you take the charts on this one.
All right. Let me just get there, and I will be there with it. All right. Guys, let me know if you could see the screen. I know that there's been a couple of issues with that. And then we could start doing some tickers. Guys, what do you want to look at?
Yeah, throw some tickers in there. Christian, just give us the UAL news, because this move has been nothing short of incredible, this overnight move. It sold off 10% on Delta last night and now is actually trading up 2% here. So it's got all those losses back and then some, because they came out with their own guidance and they're basically saying, what the hell is Delta talking about?
Yeah, they're out and they're speaking at this conference. They mentioned that they will be at the low end of EPS for first quarter guidance. I'm not sure what the expectations were, but you can see what's going on with the stock. So taking off, as you would say, for this particular one, and that's a hell of a buy the dip, as the stock is now positive. Let's go to
ripping higher.
Let's go to
it's ripping higher. You know what's interesting? You got to be the second one to give the bad news. Don't jump the gun and be the first one to give the bad news like Delta. Be the second one, and then it's like, oh, well, we kind of have a little bit of bad news too, but you weren't as bad as Delta, so we're going to buy you. That's what the algos think. So if you're, to all you corporate CEOs out there, if you're going to report bad news, wait to be the second one in the industry to report the bad news, and your stock will go up.
Let's go through some stocks really, and I'm going to go through these guys. I'm going to have a good, quick pace to this. Tesla, yep. All right, got a nice pop here, but you could see it's leaking, and it's kind of doing what everything else is doing right now, which is leaking a bit right now. As I see the VIX starting to kind of crank up a little bit, we're back up to 28 in the VIX. I'm watching the level right around, I would say watch yesterday's lows for Tesla, and I think that'll be an interesting level to watch. Any quick opinions on this one?
Gets the Trump bump, gets the Barron bump this morning, all gone just like that. I mean, there's riots at the stores. I mean, everything we said about Musk pissing a lot of people off a month ago has been just, amplified 10 times that. And that's why it's just been ugly. I mean, the stock is massively oversold. It is due for a bounce. But at this point in time, people ask, when do you rebound your Tesla? When do you rebound your Tesla? I'm like, I got to see what those numbers look like because they're burning the cars and stuff. I mean, there's so much crap going on there right now. I just don't want to be any part of, this, rioting against Musk here. We need to let that cool off a bit.
Oracle, we have not, I don't think we've covered Oracle. It's a big report that we had, but not a lot of movement here in Oracle, as their numbers were not particularly wonderful, I would say, for Oracle, but you've got really a muted response. I'm just zoomed in here on the 1 hour chart so that you could see the choppiness. We started to go lower, then took a turn and went higher, but really not doing a lot here. Same thing, like for a lot of these names that have just been, decimated the last, that's kind of dramatic, but big move. I still see this gap needing to be filled down here. And I would watch the lows of what we did in the pre-market.
I mean, the stock was $120 stock before it got the AI boom, and now you wonder if it isn't going to go full circle and give back the entire AI move here eventually, 145. Valuation still a little more expensive to where it's relatively been because they've been all that. Oracle often traded 15 times earnings. Last time I looked, it was 21, 22 times. Cheap relative to some other AI plays, but this is not a pure AI play.
I would kind of like that if we did fill that gap. I think that would be a nice place, and that's around 142. I'm going to go to Google next. I see Google was in the list to go over. Google really had all the Mag 7 names had a bad day yesterday. However, it kind of closed and still holding this pivot. Any thoughts on Google? Because I think for now I'll pass on it.
I think you got some support in here. Again, you're trying to catch the falling knife. I mean, we got to see a rally hold eventually. Like, here we are this morning, we get this wicked rally, and then, an hour later, after we've done the show for 56 minutes, the rally's gone. So, I mean, sellers are just out there. There was last night, and just going on tangent here, some serious sellers in some stocks. And it almost felt like you had like margin calls after the bell going on. We haven't seen that, but in some names they were just getting relentlessly sold in size, and I was like, who's selling some of these names that they're just getting boom, they're all of a sudden falling 3% on a huge seller, and I'm like, man, some people felt like almost were getting liquidated to a certain extent last night. But Google's not that name, but some of the other Momo names, there's definitely was some capitulatory selling last night. I like Google long term. I think if you're nibbling here, you'd probably be happy that you do. But right now, they're still selling first and asking questions later.
Yeah, Christian, I'm gonna take the charts back here for just 1 second.
Okay, all right, guys.
And boy, oh boy. Let's see. Let me add my charts real quick to this. I'm looking at the monthlies. When we go into periods like this, like it's so easy, like to do levels on a daily or weekly basis. But, when you get down and dirty, we look at things in a pretty short-term perspective. And, we try and talk. I mean, this pullback is still nothing. I mean, the stock at the beginning of 2023 was just over $80. I mean, meaningful retracements in the S&Ps, in the spider, 430, 440. I mean, and I can remember thinking during COVID, like when we just had an entire sell-off, I'm like, are we ever going to get a 50% retracement? Are we ever going to make a low? Are we ever going to bounce? Are we ever going to come back? And now I'm thinking about the opposite. I'm thinking, wow, even I'm not even going from the COVID low in Google. I mean, the COVID low in Google was $50. I mean, I'm going back to 2023. I mean, we can look at buy the dip, we can look at the opportunities and stuff, but I think if you're really looking, I think you just gotta hone down on these monthly charts and be in. I mean, we've seen these historical moves before and stuff, and with a lot of retracements. I don't know. I'm cautious. I'm cautious here in buying the dip. I really am. I don't really think it's a really significant dip yet.
The bull thesis is that this too shall pass, and US is still the best place to be, has all the AI technology of Silicon Valley, and all these companies are going to be, back, and we're going to be at all-time highs again. That's the bull thesis. The bear thesis, which is a scary thesis, is that there is a move away from America here right now. And there is a move where we're looking to China and they're looking to Europe and they're looking to other markets right now to invest in. And those markets are a hell of a lot cheaper than the US markets. So if we do get a sustained move into China, which is why I was buying emerging markets yesterday, if we do get this international move where people are actually, international investors are saying, hey, look, America wants to tariff everything. They want to bake everything in America. That doesn't sound that good for us. So maybe we're going to invest elsewhere. I mean, there's a lot of international dollars invested in the US, folks, and that is a part of this unwinding here as well. So I think we just need to be very careful with just saying, yes, this too, eventually we're all going to go back to multiples 30, 40 times, and it's all going to be a party and, it's all going to work. I mean, that's the bear thesis. And I'm not saying either. I'm just giving you the bull camp and the bear camp. You make your own decisions. But there is a bear case there where if the international investor is really ticked off and saying, hey, I'm going to go where 1, valuations are cheaper. 2, I don't have political uncertainty. 3, if you're sitting in another country and saying, well, they're all about America, not us anymore, I'm not putting my investor dollars there. I mean, that is the concern here for U.S. stocks.
And without and Zenith just makes a point here. Trump's plan, it's a 25-year plan. I mean, for Apple says they're going to build these
He's
factories.
never once said it's a 25-year plan.
Well, I'm just
I've never heard him say that whatsoever. Nobody's voting for him if he says
I'm just
it's a
telling you, someone in
25-year
the chat, Dennis, these things that he's talking about, restructuring, doing things, building factories here, totally rechanging the world economic order, the globalization of the markets, it's going to take a hell of a long time.
Yeah, but he's not saying that. 100% it's a 25-year plan.
But it's going to
take
a long time, Dennis.
To get to build those manufacturing plants is, I'm with you, Joel. But okay. I'm saying Trump is not conveying that message whatsoever. So his plan is not a 25-year plan. What he is talking about may take 25 years to happen.
Okay. That's yes.
So
yes.
I mean, there's a disconnect there. So you would have a lot of pain. I just don't see how it can just be the U.S. and that's all that's going to matter. And we're going to be able to just do it all on ourselves. We're in this global economy here now. It's been a global economy for a long time. There's global dollars in the U.S. and a lot of them. A lot of international investors. So you just got to be careful when you're, rah, make America great again. You got to be careful that you don't piss off all these international investors. Because we'll go do some research in the background, but I know there's a lot of money from outside the U.S. in U.S. stocks. Me, myself, I have the majority of my wealth in U.S. stocks. Maybe I've got to reallocate some of that. I was doing it yesterday, buying emerging markets funds, just trying to reallocate to a certain extent. So you better hope the international investor doesn't get pissed off.
Okay. All right. We're going to wrap things here. Leaking once again. So we've already had nearly 100-point range. Stocks have gone from green to red. So when that happens, I like to look at the closing price and see if people can at least establish a bid above that. Right now, I'm not even going to talk about the lows because they're so far away. Tomorrow is Wednesday, and we got some CPI and PPI data to shake things up. And Blue Putnam, former chief economist at the CME, he'll be joining us at 8:35 to review those numbers. So, folks, thanks for joining us on Pre-Market